Good morning, ladies and gentlemen. Excuse me, I do speak Vietnamese, but I won't try that today, and I don't speak Norwegian, so please excuse me. It's a great pleasure, and I'd like to thank SKAGEN for extending an invitation to share some thoughts with you today. And those thoughts are on the subject of frontier markets, and more particularly on the subject of Vietnam, which is one frontier market that I know rather well because it has been my home for 25 years. Dragon, we are a large firm, as Hilda said. We invest in Laos, we invest in Cambodia, we invest in Myanmar, but really 98% of what we do is investing in Vietnam. And these are some of the investments that we make. People say, are you a private equity investor? Are you a public market investor? And we say, well, in frontier markets, it's not easy to be exact about what you are. So what we say we are is a public market investor with private equity discipline, because frontier markets are not that well formed. What do? We invest in long-term themes, and I will refer to some of these later in the presentation. We're not rocket scientists. We follow the line, I'm sure you know, that in the land of the blind, the one-eyed man is king. And we seek in the world of frontier markets to be one-eyed. But of course, there are skill sets that we need, and I'll talk about some of these. First of all, though, what is a frontier? What is a frontier market? Where are they? What are their characteristics? And how do we invest in them? The name frontier was coined by a lady who worked for the IFC only about 10 or 15 years ago. And it refers to those economies, or more specifically, those equity markets that are not yet emerging markets. So what does that mean? Well, our definition is economies where the size of the equity market is less than about 50 or 60% of GDP. Conversely, economies where markets are more than 50 or 60% of GDP might fit the term emerging markets. One of the reasons that people look at frontier markets is because they are non-correlated to a considerable extent to big markets. And therefore, they add a level of diversification, and therefore they lower the risk that is inherent in any investment strategy. And I'm very pleased to note that your very large sovereign fund is an investor in Vietnam. So how to invest? Well, I went to a conference, and one guy stood up and he said, well, frontier markets, of course, you really want to invest in the public market, in the stock market, because that's where you've got the information and the liquidity, and you can buy and you can sell. And the next guy stood up and went, well, no, that's not true, because they're actually not very liquid markets. The level of governance is very low. So actually you want to be a private equity investor, because then you are direct, you're big, and you're in control. And then the third person stood up and said, well, actually, you don't want to be an investor in private equity because the legal systems don't work. There's no protection in the law, so you're stuffed. Why not buy the credit? And because over time, interest rates revert to the mean. And the last guy stands up and he goes, well, actually, there's no credit rating agencies. Again, we've heard there's no law, so you don't want to buy bonds. You just want to buy the currency and lie in your hammock. So we try and do a bit of everything. So here's a chart of the frontier market index, and you can see very varied. Ivory Coast, hardly, and the Philippines, 25%. This is calculated, as we know, by Morgan Stanley. And they use a wide range of metrics, many of them quite subjective. For example, the access by foreign investors, foreign ownership limits, free floats, daily liquidity. And so we don't know exactly how they create them, and there is an element of the very subjective in these indices. But if we look at some of the other features, credit, probably the most important economic feature of a frontier market is credit. And why is that? Because there's very poor capital formation. There tends to be very little equity. Savings are mostly household. People put money in bank accounts, but they don't invest. And so it's very difficult to mobilize capital to invest and to develop. And so ordinarily, development of frontier markets is funded by credit. So if you're looking at a frontier market, the most important metric is to look at credit. Not so much where is credit as a percentage of GDP, although that's relevant, but more importantly, what is the growth rate of credit? And if I speak from the example of Vietnam, for example, we have annual credit growth in the range of 15 to 17%. So GDP in Vietnam is 7, inflation is 3 or 4, so nominal GDP is about 10. And credit is 15, so credit is growing a little bit faster than nominal GDP. We have had some disastrous times in Vietnam, and that was because credit was growing at 30% a year, obviously unsustainably faster than the rate of nominal GDP. Similarly, if you look at a frontier market and credit is growing less than GDP, you can be relatively sure that growth rates will be low. So we've just heard Professor Glaser talk about infrastructure. And I've got two related charts here, automobiles and roads. And the first thing to point out is that the roads in frontier markets are pretty unsafe. In fact, the biggest cause of violent death in the world is road accidents. And the biggest population of road accidents is in developing countries. And you can imagine that because you go on holiday to a developing country, there are no sidewalks, there are not enough roads, the roads don't have markings, people go out, get drunk and get in the car, or as in our case in Vietnam, they get onto their motorbikes and then they fall off. So a rather sobering data point in Vietnam is 30 people die every day on the roads of Vietnam. So it's not very safe, and that's why growth in infrastructure generally, road infrastructure in particular, is a sign of a maturing and well-managed developing country. Equally though, of course, the demand, this is another theme. If we have infrastructure demand on the one hand, and I note Professor Glaser pointed out that you can't easily build infrastructure into a vacuum. It has to be led by private demand. And so there's always a tension over the demand created for infrastructure and the ability of the public sector, or increasingly the private sector, to meet that demand. And of course, the demand comes from normal growth. Let's call it same-store sales growth. But demand also comes from new store growth. And this is the probably the most significant demographic feature of frontier markets is their populations. And not just their populations, but the growth rates of the populations and the growth rates of the working populations and the affluent or the growing middle classes. So in Vietnam, for example, Vietnam's 100 million people, nearly 96 million people. When I went there, it was 60 million people. It grows by about 1 million people a year. Because of the demographics, about 1.8 million people a year join the workforce. And between 2012 and 2020, the middle class, defined as those having disposable income over $1,000 a month, increased from 12 million to 33 million people. That's nearly a trebling in the population of consumers. And so it's no surprise that people very quickly want to start spending money on big ticket items like automobiles, not least given the problems of road safety. So managing this and profiting from this is a key frontier market trend. Here's a measure of complexity. So actually, I have to be completely honest and tell you I don't know what the measure is. But I think you can look at this chart and you go, over here, you have relatively simplistic economic models. Over here, you have complex, developed economic models. So think, for example, resources, agro-industry, and think services. And of course, the evolution of frontier markets is to develop their structure of their economies away from agriculture, away from resources, away from volatile commodity-based exports, and towards more value-added, more consistent, more integrated exports. And I have some charts on Vietnam to show you in a minute. And a further feature of frontier markets is connectivity. Again, we've been hearing about that earlier. It's an interesting thing that in Vietnam, for example, the number of the number of fixed line phones is something like 1 per 100 of the population. The number of smartphones is, as you can see here, 40. That's 40%. The number of mobile phones is over 100 out of 100. So frontier markets may start behind, but they do have an ability to leapfrog. And you see this very clearly in electronics and telecoms, but you see it also in concepts like green energy, where we have not spent decades investing in large carbon, coal-based power capacity, and where the newly developed technologies of renewables are easier to import into our economies. Again, something we've been hearing about. This is a key investment theme for us, urbanization. If you look at China, I believe it's fair to say that every 5 years, something like 200 million people leave the Chinese countryside and move into the cities, as we were hearing. In our own case in Vietnam, you can see we're only just over 30% urbanized. When I arrived there, there was, in administrative terms, only 3 cities in Vietnam. In administrative terms, there are now something like 40 cities as the population comes together, as we were hearing earlier. And investing behind this theme, it takes you to investing in infrastructure, investing in housing, investing in water, power, all of these sort of areas. So what I've flicked through here is a number of key themes: urbanization, telecoms, integration, consumer spending, infrastructure, and credit. Those are basically the areas that we invest in. And we do so on a long-term basis. So some of our investments are 25 years old, 15 years old, 10 years old. We do trade, but you know, frontier markets are difficult to trade in. They're not very liquid. Information asymmetry, confidentiality makes it difficult. So when we make investments, we have to be there for the long term. And we have to go through the cycles. This shows you that returns in frontier markets can be quite volatile. The one I know, of course, is Vietnam on the far right. You look at that. So last year, that's actually the left-hand scale. If you look last year, the return of the Vietnamese stock market was about 60%, which is why we're all very happy in Vietnam this year. But if you look at this metric, 60%, but then you look at the dot, and the dot is the average return between 2011 and 2017, and you can see it's right down the bottom. So what does that tell you is that volatility is a feature of frontier markets. While I made the point that frontier markets as a whole can act as a diversification of risk in a portfolio, each individual frontier market will obviously have its own risks. We had an enormous boom and bust around the time of the global crisis in Vietnam. 2007, 2008, I mentioned that credit was growing at 30% a year, every year. It went spectacularly wrong. We had a horrific bear market. There are still people on trial, going to jail for things that happened. I'll talk about that in a minute. And so the markets were smashed. 2012 was the bottom. It's been a gradual recovery since then, and that's why we've had a strong year last year. Posing the question, of course, will it continue? So, if I may, look a little bit at Vietnam. There we go. Many of you, I'm sure, have visited Vietnam. Most people visit it first on holiday. That's how I first visited it. You see the shape next to China. A Vietnamese friend of mine said, the reason the shape is like that is because we have China on our shoulders. And there's no question that China is the biggest influence. Some of you will have read in recent years talk of tensions in the Asia-Pacific region. Some people talk about North Korea. Some people talk about China and the South China Sea, or as we call it, the East Sea. But here's one point I would share with you, and I think the market has got this wrong, that because of the US withdrawal from the Asia-Pacific region has been one of the best contributors to stability in the region. And the reason is this, that for us in Vietnam, or for the Burmese, or for the Koreans, or for the Japanese, living next door to China is not new. We've been doing it for thousands of years. And understanding that China is the big power. The Chinese word for China is Middle Kingdom, the center of the world. That's not new to us. 500 years ago, we had our relationship of vassal state. And while not everybody likes it, nobody is surprised. And the US interests in the Asia-Pacific were stirring things up in a not very positive way. So, for example, the China factor in Asia right now is a massive positive. And I'm not just talking about one bridge, one road, the big program that I'm sure we all know. It's in investment flows. It's in flows of tourists. It's in economic linkages. It's in climate change. It's in global leadership. So that's a positive. Vietnam is not China, but it's about as close as you can get to China without being China. It's a Confucian society. It has a similar political structure, similar administrative structure. Food's not that different either. The languages are quite similar, 50% similar. And of course, the path of development of Vietnam is very similar to the path of development of China. I talked earlier about demographics, and of course, global demographics is a fascinating subject because we read about the aging of populations, and nobody talks about the fact that the global population is going to hit 10 or maybe 11 billion people in the next few years, because population is, of course, a taboo subject. Nobody can address it. Well, in Vietnam, they do. We had a very rapid growth in populations, and the government introduced a 1 or 2 child policy in the 1980s. So what they said was, you can have as many children as you want, but if you have more than 2 children, you lose your public education and healthcare grants from the state. So that was effective. But here's the interesting thing. 1 month ago, despite the demographics of Vietnam, the government removed its ban on more than 2 children because they are sharing the concern about this aging of the population. So demographics can change very quickly. Political stability. So here's another thing that's coming from, I'm sure we're all aware, is coming from the frontier world or the emerging parts of the world or different economies, is different views about political systems. So we have a one-party state. We have a national assembly of about 600 people. There is only one party, and we have elections with candidates from only one party. But there are independents. So about 20% of the National Assembly is independents. And interestingly, outside Rwanda, Vietnam is the National Assembly with the highest population of women in all of the world's national assemblies. So different features come in. But the point of this slide is to say that single-party states believe they sort out their problems themselves. They don't believe in democracy in the way that we do here in Europe, or indeed other parts of the world. And so there is sometimes a lack of transparency, and there is sometimes volatility, actually. But over the long term, what comes out of single-party states like China, like Vietnam, is stability. So we had a bit of a crisis of sorts, an economic crisis that came from state capitalism. I don't know if we remember 10, 15 years ago, China, Brazil, Russia, even France were big proponents of state capitalism, and so did Vietnam join that club. The idea that the state being active in economic activity would strengthen the political system. Of course, it all went wrong, and state capitalism actually ended up threatening the political system. So we've had some fairly aggressive political reform in Vietnam, and this is the point, that although we are a single-party state in Vietnam. More bankers are in jail. More corrupt members of state-owned enterprises are in jail. In fact, today in Hanoi, we have a member of the Politburo for the first time ever on trial for misdeeds when he was running the state oil company, and he will probably go to jail for 10 to 20 years. Meanwhile, in Ho Chi Minh City, down in the south, the chairman of the largest private sector bank is on trial. So the point here is to say that single-party authorities do not necessarily mean no technocrats, lots of corruption, and no accountability. Self-correcting politics, yes. So we had a change of government last, sort of change. It's sort of a evolution rather than revolution, I would say. This gentleman, top left, was sort of pushed out last year for divisiveness. One of the charges against him was that he signed a contract with Tony Blair. So I sympathize with him. So, economic model. Well, I mentioned we're not rocket scientists. And in the world of developing economies, and I think it's still true today, although there are arguments against it, the basic model is you use what you have. And what do you have if you're a poor developing country? You have people. So you use your labor. So you, of course, want to try and improve the quality of your labor, but you've got to start off low cost. And that's what Vietnam did, and it's what most countries did. And in order to use your labor, you need investment, because you don't have any investment. As we mentioned earlier, capital is not well formed. So you need foreign investment. So you need to have a legal system that can encourage foreign investors in, can make them feel safe, and can allow them to build factories and manufacture and export. So that means you need ports and a bit of infrastructure. You need customs officials who aren't all corrupt, etc., etc. And here, top left, you can see that's the growth of foreign investment into Vietnam, successful. That's about, GDP is about $250 billion, so that's about 6% of GDP. The biggest investors are from Asia. Samsung is the biggest individual investor, but Japanese, Chinese, Hong Kong, Singaporean investors. And you can see that's turned into a reasonably effective export machine. And here's the point I was making earlier about complexity. You can see over the years, commodities declining as a percentage of exports, manufactures increasing. So you start with footwear, slippers, socks, shoes, coats, shirts, clothing. And then you move up the value chain into electronics and cell phones. And Vietnam is a cell phone generation. Taiwan was Korea is a semiconductor. Singapore is a hard disk generation. Vietnam is a smartphone generation. And a reasonably well-balanced set of markets. This is a particular feature of Vietnam, but it might also be true of others, that the traditional relationships are more varied and diversified. For example, not just the old communist bloc, which happens to have been a big market for Vietnam, in fact the biggest market for many years, but also the non-aligned movement. Do we remember the non-aligned movement? In countries that were specifically not aligned into one of the big groups. Another feature, of course, is the improvement in the terms of doing business. So this happens to be the World Bank's report. They provide it every year. It's the ease of doing business. It's a whole set of measures. How long to pay your taxes, how long to set up a company, how long to clear customs, what's the cost of transportation, rentals, etc., etc. And you can see generally improving throughout Asia, Africa, UAE, and there's a change in recent years. So that brings me to the stock market, which is the last of my set of comments, you'll be pleased to know. There we go. So we did have this very painful period of sort of recovery from recession, with what clearly looks like a bit of a breakout. It's not quite Bitcoin, but it looks a little worrying, doesn't it? Can it continue? Well, this is what our analysts reckon is going to happen. So look at the sales growth. This is the top 50 companies. So the Vietnamese market has about 800 listed companies, but the top 50 are like 80+% of market cap. So this tells you what the big companies are doing. Sales growth. So 14 low, 15 some recovery, bit of a pickup 16, 17. Actually, we're showing a decline, but that's because of the that's a technical factor on the restructuring of one of the very big companies. So actually, same store sales growth would be slightly higher than that. But if you look at the net profit growth, you can see again, poor years. Banks were writing off, real estate companies were reflecting losses, construction companies losses, and then we've been in this recovery period, 22% profits growth, and that's broadly showing through at the earnings per share level. Companies relatively low indebtedness, partly they've been increasing capital. ROEs at a reasonable level, and then of course the price earnings ratio, or indeed the PEG ratio if you're familiar with that, not terribly challenging. I think I understood Alexandra's comment this morning about emerging markets being slightly less expensive than the main markets, and I think that's what this tells you. I will not focus on that. Here's a chart of a bunch of emerging and frontier markets. So this tells you the PE ratio and the earnings per share growth for this year, forecast. So really, you want to be over here, actually. So Sri Lanka, China, Vietnam, these are in the right area of the market. So that's probably supporting our quiet optimism about the future of the market. And there's, of course, other factors as well. And this is a big frontier market theme, is the evolution of markets. So forget the fact that the Vietnamese stock index was up 60%. That's great, but forget that. What's more important is last year, the size of the market grew by over 100%. And the reason for that is lots of developments, in particular, growth of the market through the government privatizing large numbers of companies and selling down its interests in companies that have already privatized. Because, remember, state capitalism was a disaster for Vietnam. If you look, for example, these are some of the companies that have been privatized and are continuing to be privatized. So to put numbers there, the stock market's about $120 billion, about 50% of GDP. Last year it grew from 40 to $120 billion. The government needs to fund its budget deficit, 3-4-5% of GDP. They have identified $20 billion of companies that need to be sold before 2020. And interestingly, for a communist country, we have a prime minister who speaks very comfortably about his target for market capitalization as a percentage of GDP. I mean, no British Prime Minister would talk about that. Also, a very active private sector. So Vietnam is referred to by some economists as a transitional economy. That means it's transitioning not just from poor agricultural to modern and integrated, but also from socialist to, let's say, more free market approach. So one key driver is the reform of the state sector. But at the same time, we've got this hugely numerous, young, enthusiastic private sector developing. So roughly half of the companies in the stock market come from the state sector, and roughly half come from the private sector. And I see there's not very many minutes left. I was supposed to talk about some narratives, some case studies. Well, I made reference to the role of women. And guys, I'm sorry to say this, but there's no question our most successful investments in Vietnam are in companies that are run by women. And there are probably many reasons, but my observation would be that women tend to be better risk managers, particularly in frontier markets. Thank you very much.
Thank you, Mr. Scriven. Thank you so much. I think I'll stand on this side of you so I don't trip over the table over there. And I like your comment on your quiet optimism for next year, because full and fair disclosure, and to make our lawyers very happy, I'm instructed to mention that Contiki is invested in Dragon Capital and have a position in a couple of their funds. So that's for fair and full disclosure in today's MiFID world. But we have a couple of questions for you, Mrs. Scriven. I'd like to know one thing. One question that is quite interesting is sort of the concept of sustainable investing. And a lot of investors here today with us are interested in finding opportunities around the globe that provide them with the ability to invest in those companies that are sustainable. What do you think the chances are of finding those in Vietnam today?
Yeah, it's a very good question. I didn't mention that, but ESG is a key part of our investment philosophy: environment, social, governance. I think anybody who makes any investments anywhere in the world must be a governance warrior. You can't be an investor without being aware about governance. But lots of people invest without considering environment and social. I think for all of us, when we invest, asking what are the environmental and social risks inherent in any investment is a very important question to ask. It goes directly to the sustainability. We are committed to ESG, not necessarily because we are brilliant people, good people going to go to heaven. No, we are committed to ESG because we made a big mistake. And it was extremely painful mistake. About 10 years ago, we invested in a company that was a housing developer, and we didn't pay attention. And this housing developer very quickly became involved in plantations, agro-business, rubber, and was responsible for destruction of large parts of Cambodian forest. And managing that investment was very painful. And we take out of it a strong commitment to ESG. I would say, though, that frontier markets, typically, it's more difficult to get the information. So you need to be on the ground and roll up your sleeves a bit to properly understand the risks.
Great. Well, there's actually a long question here from the audience, and I'll try and make it a little more succinct. The question is around the political system today in Vietnam, and can you draw a parallel to the old monarchies and kings that were enlightened to start feeding the democracy, or is there a risk, given the party system here today, of that democratization stopping in Vietnam?
Wow, that's a really interesting question.
It's a very deep question, and that's the short version.
That's a very, very interesting question, yes. Simply put, I have sympathy for the approach of countries like China and Vietnam, because I think at the end of the day, they may be single-party systems, but they are delivering the goods. So, for example, you ask the World Bank, and the World Bank will tell you that Vietnam is the fastest case of poverty reduction they have ever seen. So if the job of government is to improve the lives of its people, you would have to say that the Vietnamese government is doing its job. That doesn't mean to say that over time, and you have seen this in Taiwan, in Korea, in Indonesia, in Thailand, where accountability grows. Citizens demand more responsibility, and those systems become more democratic. So when I first went to Asia, Korea and Taiwan were both under martial law, military rule. Now, they're happily locking up their presidents. And in fact, the slide I showed there on the political system, and I also made the reference, today one of that senior party leadership is on trial in Hanoi and will go to jail. So I think it's moving in the right direction.
And he was in jail for divisiveness. I wonder how Trump is doing and would be doing in Vietnam.
He's welcome to come.
Yeah. So I can't help but playing devil's advocate with you just for one moment. And it is about being a fund manager and being devoted to one country. 98% of your AUM is sort of invested in Vietnam. At what point do you say, when the criticism is, well, you're kind of stuck investing in that country, at what point do you say, hands off, you know, there's no interesting investment opportunities in Vietnam?
Yeah, so all of you are in a luckier position than me because you can say no to Vietnam. I can't say no to Vietnam. And I did make a reference to this. Of course, we can't go short. We actually tried to develop a capacity to invest in other Asian markets, and we couldn't. We felt really what we know is Vietnam. So what we do is we work through the problems. So you know, we have $3 billion under management, which is big in Vietnam, but not big anywhere else. But we have 110 people, which is a huge number of people. And the reason is that we have, we are very populous every aspect of the investment process. And the reason is to try and avoid risk, or where we can't avoid risk, it's to deal with the risk, to sort out problems, to sit with banks that have got big non-performing loans, to deal with ESG issues, to deal with government issues, to work out how much to pay people, to fire people, to deal with business strategies. So it's inherently, it's a long-term proposition, yes.
So you mentioned China and sort of the image of carrying China on your shoulders. Is there any comparisons that you, in a nutshell, can make to the economic model of Vietnam vis-a-vis that in China?
Well, they are very similar. Vietnam will look, when Vietnam's contemplating a new policy, you know, one that we're very active in actually is the development of pension funds, for example. We've been working for 5 years with the government. So they'll go to Canada, and they go to Germany, and they come to Scandinavia, and they go to Korea, and then they go to Hong Kong, and they look at Thailand. But then they come back, they look at all their reports, and they go, what's going on in China? And China is the ultimate sort of stress test or reference check on any new policy. And that's a good thing and a bad thing, of course. You know, broadly speaking, the development of China in our lifetimes is a massive success. But there's been problems. There's been problems of misallocation of capital. There's problems of not accounting for environmental damage. and costs. So, you know, we have to try and learn from these issues.
Thank you so much. And on that note, thank you, Mr. Dominic Scriven.
Thank you all very much. Thank you, Hilda.
Thank you.